The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 31 January 2020. Well, the first month goes by. Want to prove to everyone how well we did last year. I expect this year to be the same. We're up average of 63% on top tier. This is where you want to be invested in 2019 and 2020. I do think that the gold stocks will do. And these are gold, silver, royalty companies. They're not just gold and silver stocks. Regardless, 63% average. And I think we're going to do that well again this year. I just want to go over the general equity market real quickly with the coronavirus. The Chinese stocks led the emerging markets lower. The Chinese iShares gapped down 2 days in a row on huge volume. We may have seen the top of the emerging market shares and the iShares, and this is spilled over in Australia. Dow Jones is testing the 50-day moving average. So stock market's weak, basically worldwide. First article up from MarketWatch. Deutsche Bank posts fourth quarter annual loss in 5 years after worse than expected quarters. No real big news here. We've been watching Deutsche Bank, as many in our peer group have, and we know that this is a disaster waiting to happen. They've been laying off massive amounts of people, trying to consolidate and get healthy, but it seems to be a lost cause, at least from my perspective. We'll keep an eye on it. And one of my favorites, almost every week I bring up at least one of his articles, Charles Hugh Smith, has the global economy finally exhausted its good luck? The past 3 decades of global growth are rarely attributed to luck. It's all the result of our brilliant fiscal, monetary, and trade policies. Those in positions of wealth and power are delighted to take credit for this tremendous success. But as a general rule, the more knowledgeable you are, the higher up the food chain you are, the greater your awareness of the role of luck in any unbroken chain of success. It's a great article. I suggest, since this is the weekend, I usually put these out over the weekend, that you take the time to read the entire article and tune into the truth of the matter. And there is a lot here that's manipulated, as we all know, and because of that fact, and the first to get the money are the big banks that go to the elite to basically run them. They have an advantage over everyone else. Bringing this one up this week from Wolfe Street, Wolf Richter does great work. I love his attitude, and I guess I'll say sense of humor. I'm looking at this as a metaphor, basically, for the entire system. What happens when investors stop fueling cash burn machines? At movie past parent, everything goes to zero. Shares, which peaked and spiked at 1,200% in a month, go to zero. Board of directors goes to zero. Executives go to zero. Sales go to zero. Investors have been eager to plow vast sums of money into companies that offer products and services at an investor-subsidized price, so-called cash burn machines. They elbow into all kinds of markets and disrupt things. They include Uber, Lyft, WeWork, Bird Rides, and it goes on. And he says Tesla, and then he goes on to state that the entire shale oil and gas sector, which I'm very negative on, as anyone that's listened to me for very long knows. He goes on to explain what happened here with this movie past stock. You can see the chart here if you're watching on video, if not on the podcast. Did as he said, skyrocketed up, and of course basically blew up. And I think that's a pretty good metaphor for the economy overall. We've been pumping all this funny money in for quite some time. It hasn't really benefited much other than the indices. In other words, what we measure things by, which is the amount of money that's gone in the stock market. Stock prices have gone higher, but the real physical economy has not boomed. It's basically stagnant and actually contracting, as I say, week after week. So at some point, reality meets the system, and of course we'll see various things. I think food's a big one. I've said energy, I think, is low now, going lower because the coronavirus, and oil keeps going down. But I do think a few years out, you're going to see some interesting markets in the oil sector and the energy sector, generally speaking. This one kind of tickles me. It's from Reuters. J.P. Morgan plans to cut hundreds of jobs in consumer unit, and they took it from Bloomberg. You can see here, Reuters, J.P. Morgan is planning to cut hundreds of jobs across the consumer division, Bloomberg reported on Tuesday, citing people briefed on the matter. The report did not mention the exact number of jobs to be cut and said the planned layoffs represented about 1%. J.P. Morgan will notify the impacted staff on February 6th and give them a chance to apply for other roles. What I find amusing here is that 70% of the U.S. market is driven by consumers. In other words, if people out there buying stuff, that's what basically keeps the economy going. And if people quit buying stuff, the economy contracts, and it has been. And as prices continue to go up, even though the officialdom tells us that there's no inflation or very little, the truth of the matter is if you buy health insurance, you buy food, you pay for college tuition or almost anything out there. In fact, it's costing me more. As a side note, I digress, to board my dog when I travel. It used to be X, and now it's gone up about 25%. It used to be fed with that price. Now with the price increase, I have to bring them the food as well. So it's hitting almost everything in reality. Of course, officialdom, again, underreports it, and it's deliberate to do it that way because the lower they show, the less interest costs, and the less when they borrow massive amounts, like over $1 trillion a year, interest payments are low if the interest rates are low. So I digress to come back, but I find it interesting, the consumer unit, and this is basically how the system is running. And when it contracts, it's going to contract the economy. There is little doubt about that. Another Reuters article from technology sector. Airlines cut China flights as companies restrict travel on fears of the virus. Of course, you already know this. Just wanted to point it out. I'm aware of it, and I'm watching it carefully. I think Chris Martinson's probably doing the best job, balanced. Plus, he is a doctor in that specialty, and he can take you through the data in a very layman way and explain it in, at least for me, a very succinct, cohesive way so you can really understand what the numbers really mean. And this thing is something to be aware of and probably stay on top of. How it manifests from here on out remains to be determined, but it certainly looks to me from what I've studied that it is something that could be a greater concern in the coming weeks. Time will tell. Moving on to the metals, my friend Steve St. Angelo, SRS Rocco report. I certainly suggest that you watch his work, go to his site, probably subscribe or get notifications. I've had several calls with him over the years and really admire a lot about him and what he does and love his graphs. This is about the true energy in a gallon of gas, and it's really 450 human labor hours. And this is something that most people aren't aware of. I mean, just think about what that really means. I mean, if a gallon of gas in the United States costs $3 per gallon, let's say, and you're getting 450 man-hours of labor from that, what are you paying? A penny an hour for labor? Who works for that? Not even the Chinese work for that, and it's less than that, actually. So this is really something that really is understood of how we all, yours truly included, take our energy for granted. Everything that we do relies on energy, and that's why I started the energy report last year, which we closed down after a year, by the way. But nonetheless, it is a sector that I'm looking at more and more and looking for opportunities to invest in. I suggest you take the time this weekend to read this article and find out, what the thought pattern is here and do your own thinking on it. It's very, very interesting in what it costs in energy to produce an ounce of gold or an ounce of silver. He goes through that here. And I've only read this once. I plan to actually print it out and save it. I think it's that good. So I'm going to leave it there. I'll be back with you next week. I appreciate anyone that posts my weekly podcast to their friends, family, social media, or whatever. It does help. We don't charge for any of this. I only charge for the research reports that we produce. Everything else I do is pretty much for free and often on my own cost to get to these conferences, fly, and all that stuff. So wish you the very best for the new year. We're 1 month in. The coronavirus is something to watch, not get overly fearful about, but certainly be aware of it. And I will be back with you next week. Remember, there's nothing more powerful than the truth, not your truth, not my truth, but the truth. I'll be back with you next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years.
My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.